us so promptly. We are expecting about 100 people on this today. We're currently sitting at 60. Good morning, everyone. Thank you for joining us this morning. We are just explaining to everyone, if you've just joined, we're expecting about 100 people. There are quite often a few no-shows. So I think we're going to kickstart the session. We currently have 68 people on. We are recording this, so the recordings will be sent out to you, so you can recap on any bits of information that are pertinent to you and your business. So you're very welcome. Thank you for joining us. I'm Adam Weatherly. I'm the Learning and Development Manager from ISME, our SME Association. Just a little bit of housekeeping. Try and keep your microphones muted, the usual stuff. If you've got additional questions from the discussions that are ongoing, if you could pop them into the Zoom chat, we will address those at the end of the session. Many of you have very kindly sent in your inquiries in advance of this session. So we will be going through those in a chronological order, and then we will address your additional questions in the chat room at the end if we have time. Okay. And as mentioned, this session is being recorded and it will be circulated after the event. So just like to welcome the panel. As you can see, I'm on the left there. I'm Adam Weatherly. I'm the Learning and Development Manager. I'm just facilitating today, so I'm doing the questions. We have Neil McDonnell with us, the ISME CEO. Derek Dunne, Customs Compliance Manager from Manifests. You're very welcome, Derek. Thanks for joining us again. Similarly with Paul McMahon. Both Derek and Paul have been on our Brexit panels these last few years, so are familiar faces to us. Paul is our legal eagle today, he is a solicitor, practicing solicitor. He's practiced in Ireland and in the UK, so has experience on both sides of the water. And a great welcome to Ray Ryan from Revenue. Ray is, I can't actually read your title because the profiles are in the way. Ray, Assistant Principal of Customs Division from Revenue. And thanks for joining us, Ray. I think an excellent addition to the panel this morning. I'm just going to, please, by the way, if all your questions aren't answered today, we do have a Brexit advice page on our website. It is very useful. It's very easy to navigate. Just a few clicks and you will get to the information that you need. We also have COVID support page. That is also very useful if you want to understand the government supports that are out there for you. And then we have our general business advisory. There's my learning and upskilling page as well. Do keep an eye on that. We have some very good entrepreneurial programs kickstarting over the next couple of weeks. We are subsidizing those by at least up to 40% for our members and non-members. So please have a look at those. And we have our Back to Business portal, which is tied in with all the pages that I've just mentioned. So I'd like just to say you're all very welcome today. I'm just going to stop screen sharing so that I can see you all. So I would like to get straight on with this. We're going to try and get this done in an hour, guys. So we're just going to press on. Don't forget, if you have further questions, pop them in the chat. So we're going to start with VAT/revenue. And the first question is, what are Irish online retailers doing about the new UK VAT laws for the sale of goods under 135? Brackets, registering for VAT in UK, question mark, fee of 1,000 to register. What are the alternatives? Who wants that one from the panel? It sounds like it might be one for Paul. Put you in the hot spot there. Paul, you're on mute there, mate.
Can you hear me now?
We can.
Okay, perfect. The sub £135 registration in the UK applies only where you're selling to consumers, because in the same way as Ireland, if you're selling VAT goods to the UK, they've got postponed accounting. So that shouldn't be an issue there. But if you're selling to non-VAT registered persons, the UK have brought in the scheme that's coming in the EU here in Ireland in July for sub €150, and you have to register for consignments less than that amount just with ordinary UK VAT. You can register online. It takes about 40 or 50 days. Pending that, you can because I've had this query with Hmrc, you can issue VAT invoices provisionally, or issue invoices provisionally, and then you have to issue proper VAT invoices when you're finally registered. But the scheme is applicable. The £1,000 to apply, I actually tried to check on that. I don't think that's a fee chargeable by Hmrc. It might be by some advisor in the particular circumstances. So as I say, it only applies for sale of goods to to consumers, and sub £135 consignments. That's my understanding.
Very good, thank you, Paul. Does anyone want to add to that whilst we're on that question? We'll move on otherwise.
Sorry, excuse me. Could I ask him just to go through that just once more, please?
The particular, sorry, the sub £135 UK requirement applies for sales to consumers in the United Kingdom. Irish,
so if we supply, if a consumer buys a product from us, which is less than €135.
Yeah, in normal course, they would have had to pay VAT at the border. And this is an easement by which the Irish business registers with UK Hmrc to pay that VAT. So it makes the, it's the sub customs duty level. So it's an easement to sell goods below that level into Great Britain.
So does that mean we charge VAT, or they are going
to charge UK VAT and collect it and remit it to Hmrc?
Okay, so technically we have to, getting back to the second part of the question then, we should be registering for VAT in the UK.
In that particular, for that particular purpose, yeah, not generally.
That's, in other words, so that I'm absolutely clear on this now, sorry. So if we are selling to consumers online on our business, we need to register for VAT in the UK.
Sub £135, yeah. They did seem to have a special registration, and I know somebody who did that, and when they went in to use it first thing in January, it didn't exist. And I rang Hmrc and they said, no, it's just general VAT registration that applies.
Okay. So if somebody buys something worth 25 or 30 euro or whatever it is, we need to register for VAT with the UK authorities.
UK authorities, for if they're consumers, it doesn't apply.
If they're consumers, yeah. Interesting. Thank you very much. That clears that up.
Okay, thanks, Tom.
Thank you.
Actually, guys, if you could pop your questions, just so we can keep things clipping along, if you could just pop your questions into the chat there, we will address them at the end. But thanks for that input there, Tom. Thank you for answering that, Paul. Second question, what is the correct position regarding registration with Hmrc for VAT on imports to Britain with a value under £135? I think we touched on that just now. Paul, can you pick up on that one again?
It's just the same question, really. So over £135, the consumer will have to pay UK import VAT, and it'll be a zero-rated sale from Ireland. It'll be zero-rated sale from Ireland in both instances, but this question of registering for UK VAT doesn't apply to consignments over £135. They'll just have to pay duty if it applies, and UK VAT at the border in the same way as we have to pay Irish VAT and EU VAT at the border coming in.
Okay, thank you, Paul. Is VAT applicable from UK companies if we are bringing in goods from the UK? If so, is it reclaimable in Ireland, or does it become an increase to the product cost?
But that's the whole position in terms of importing. You pay VAT at the border normally, but if you're a business, it depends if you're a business or you're a consumer. If you're a business, you can use postponed VAT accounting, and that doesn't, it's much the same as the position was before, but we have some questions later on that you get into the nitty-gritty of that. So it depends on, it's about Irish import VAT. The general principle is you pay import VAT at the border, but for VAT registered businesses, there's the possibility of deferring that. But for consumers and others, there isn't, it's payable at the border. That thing we mentioned in the UK a moment ago, £135, as I understand it's coming in July in Ireland, sub €150. So UK GB suppliers will have to register when they're making consignments under €150 after July.
Super, thank you, Paul. There are some of the questions sort of that do cross over into each other, but there are some variances. So please be patient with us on that. Is import duty applicable on goods imported from the UK? If so, are there clear rates for specific products, and where will we get these rates from?
Yeah, I can go through that if you want.
Thank you, Ray.
Yeah. The trade and cooperation agreement is the free trade agreement that was signed. So what that means is there's a preferential rate of duty for UK origin goods. So anything that's UK origin can be imported with a 0 rate, but you need to claim it on your declaration. If it's any other goods then, or any other origin, you need to actually check it in relation to what duties may apply. What you can do is you need a commodity code. Each product has a commodity code. It's a 10-digit code. And you can enter the details onto TARIC website. It's a TARIC. And when you enter the commodity code and the country of origin, it will give you the duty rate that applies. So again, your supplier in the UK will have a commodity code for you, perhaps. So it's useful to check that to make sure it's correct, make sure what duties may be applicable on it and be aware of it. And then obviously that the VAT will be on top of that.
Great, thank you, Ray. What is the position re products manufactured in the EU but imported to Ireland by Irish company via the UK-based agent? Will tariffs, import duty, VAT apply? Sorry, I just lost you there. Sorry, the VAT apply, and products originating in the EU being exported to the UK from Ireland, will tariffs, VAT apply? Who wants that one?
The first one I'll take.
Thanks, Ray.
On the EU goods coming into the UK and onto Ireland, it depends on what process is used. So if you have a distribution centre is the current example, that the goods are imported from the EU into the UK and they're free circulation goods in the UK. So they've brought them in under free circulation. If it's those goods are exported into Ireland, customs duties and VAT may apply on those EU goods. If the company in the UK imports the goods under a customs procedure or maybe on a transit procedure, customs warehousing or transit procedure, they can retain their EU status and then they can be exported to Ireland without any payment and duties in relation to that. So again, it depends on the business model. But if you are bringing goods in that scenario, check with your supplier in the UK or your distribution centre to see what process, are they actually importing them into the UK for free circulation? If so, you may be subject to duties when they arrive here because you won't be able to avail of any preference because they're not UK origin goods.
The other side of that question, going the other way, I suppose the better news is that when Irish goods are being, or when goods are being exported from Ireland to the UK, the origin that matters is EU origin. So in that particular question, we wouldn't have the reverse, what they call the Percy Pigs problem, that where goods are brought in through the UK, because what's looked at in terms of goods qualifying for 0 duty in the UK is whether the origin is EU, and then to some extent you can accumulate UK goods in there. But because we have the whole of the EU, the reverse of that isn't the same problem, effectively.
Excellent, thank you both. What VAT rate applies to the sale of goods from businesses in Southern Ireland to businesses in Northern Ireland? And what VAT rate applies to sale of services again from business in the South to business in the North?
I suppose the short answer to that is that it hasn't changed because Northern Ireland is in the EU single market and customs area for goods. So the treatment would just be the same as before. And if it's to a VAT registered purchaser in Northern Ireland, they would self-account. In terms of services, even though Northern Ireland is outside the European Union on services, the way VAT and services work, if you're selling to a recipient or providing services to a business recipient abroad, they self-account. And that rule actually isn't linked to the EU at all. So both of those questions, it shouldn't change.
Okay, thank you, Paul. Before Brexit, Irish companies providing IT services to the UK companies did not have to charge VAT. We just had to confirm our customer was VAT registered. Is this still the case post-Brexit? Do we still not have to charge VAT?
That's actually a similar question. If you're providing services, the general principle, I mean, there are exceptions with VAT where your particular types of service, like got to do with land, there's special rules. But generally, when you provide services to a business in the UK, even after Brexit, and that this means Northern Ireland and Great Britain, the recipient self-accounts because that particular rule isn't dependent upon being in the EU or not. Where there can be significant changes is when the recipient is a consumer, is a private person. In that situation, there can be circumstances where you might even have to register for UK VAT in certain circumstances. The rules are quite tricky around services because it depends on the type of service involved, but that's where the major change has been. But generally, B2B services to the UK won't have changed.
Okay, thanks, Paul. Anything else to add there from the panel there? We can move on if not. Okay, next question. We are an Irish registered company supplying a service to UK companies. The service does not include the supply of goods. Previously, we simply invoiced the UK by applying an EU 0% VAT and showing their VAT number on our sales invoice. Turnover for this service is expected to be in the region of €100,000 during 2021. Can you advise I am still compliant by not including VAT on our invoices?
It's effectively the same question again. I mean, obviously VAT's always very tricky and you can have complex situations which you need to look at, and there's like the major accounting firms of 20, 30, 40 people in VAT, and there's a reason for that, and the numbers are big. So if your whole business model is affected, I would look at it very carefully, but the very general principle remains the same. If you're providing services business to business to the UK, the same treatment applies, because the VAT rule doesn't depend on whether the country concerned is in the EU or not. This was always the case if you're providing services in third countries. For the case of services, not goods, and it's business to business, it's business recipients, not customers, the position remains the same. But you always need to look at your particular circumstances, because that's such a big revenue taker, and the risk of making a mistake, obviously, and being audited is pretty critical. But that general principle continues to apply.
Excellent. Okay, thank you, Paul. And again, this one's similar, but it involves warehousing. But if a European producer sends goods to a warehouse in Ireland, but are invoicing a company in the UK, what is the applicable VAT rate, and should it be applied to the invoice? Those goods will then be invoiced by the UK company to their customer in Ireland, and what VAT rate should be applied in their invoice? Is it correct that due to VAT triangulation, that the rates to be applied would be the VAT applicable in the country where the goods were shipped, and that the UK would apply VAT at 20% on the invoice to the Irish company? As the goods are EU origin, a charge duty is not applicable. Bit of a long one, that one.
Okay, I think that's touching, and maybe Ray wants to talk about it. I think that's touching on triangulation, and that's a very, you need to look at that one very, very carefully, because the conditions for zero rating and a supply within the European Union were very precise, and the goods, you had to get a quotation, you had to get an invoice from a recipient in another EU state, but the goods had to move to an EU state. So I suspect very strongly you need to look at that one very, very carefully, because the entitlement to zero rate within the European Union is very precise. You should go to the revenue website and look at the conditions and see you're being satisfied. And if the UK is involved, there's every chance you're not satisfying these rules on triangulation, and you might have a very complicated VAT position there. So that one needs to be looked at extremely carefully. And
it's definitely
if you have any three-country aspect with the UK falling out, there should be alarm bells ringing from a VAT perspective.
We have taken in a few queries on that, and the triangulation is gone as such, because the UK are no longer part of the EU, so the triangulation can't be applied. So it just does depend on the VAT registration in each entity in each country, and then the actual specifics around the supply chain. So again, if you've any doubts, you can email into brexitqueries@revenue.ie. We have dealt with some of them, and like Paul was saying, depending on the supply chain, depending on the VAT registrations and the way the invoices are done, it's a different answer. So it's very hard to give a general response. I think what Paul has covered there is the best way to focus it. But if there's any queries in particular on the model, that you can send it into brexitqueries@revenue.ie, and we'll come back to you.
Oh, that's very useful, Ray. That's a useful email to have. Also, my colleague Maeve is putting some useful links into the chat there, guys. So do refer to those when you're looking at the recording after this event. Slightly different one here. I want to import a Mercedes van originally built in the EU and sold new in England. Is there duty and VAT payable?
Short answer will be yes.
Yeah. Okay.
But again, it's back to that what we were talking about earlier in terms of the warehousing and the goods moving in. So if it's EU origin goods and they're in the UK, the trade and cooperation agreement only allows for preferential duty rates for UK origin goods. So in this case, the Mercedes van will not be UK origin goods. So customs duty and VAT may apply on the import from the UK. So again, there's other requirements and other potentials around reliefs of return goods, but more than likely it wouldn't apply to that type of vehicle.
And the position with vehicles, the European Union has a very definite system that facilitated VAT on vehicles in a very coordinated way. And once vehicles weren't new anymore, VAT wasn't really chargeable. But a big shock that a lot of people have had is that when you import, VAT is always payable. So you can have VAT and you can have duties as well, depending on the origin of the vehicle, because obviously a lot of vehicles are made just, Japan or wherever. So this is an enormous thing for motor vehicle dealers because of the fact that the European Union had a very special system for VAT on what they call new means of transport, which is cars and vans. Suddenly all imports were prospectively subject to VAT, whereas once they were a certain age, after a couple of months and a certain mileage, they kind of, as long as they were VATed once in the EU, that was more or less the end of it. I'm simplifying, but this is an enormous issue in some sectors.
Okay, yeah, thank you, Paul. Does HMRC charge VAT on shipments from an Irish company to a UK tax registered company?
I suppose that's similar to the question earlier on. It's the exact same in reverse. There's in principle VAT's payable on the border. That was always the position. Both in the UK and Ireland, there was deferred VAT accounting. You needed a guarantee deferred for a month. But now both the UK and Ireland have introduced postponed VAT accounting, whereby you can import on the same basis before, but you do have to follow a particular procedure. Like, I mean, as Ray says, it has to be noted on the customs import return and you have to be the importer. But in principle, if it's done properly, a UK business can import who's entitled to charge, who charges VAT on all its sales and is entitled to recover its VAT, can import VAT free, but as long as it has to be done properly. So they have the reverse postponed accounting, just like we've introduced in the last couple of weeks as well.
Okay, and Paul, the panel, the next question is very, very similar, but it involves sort of bringing products from outside the EU, specifically the US. Are there any differences there?
Well, I understand. Sorry.
Go on, Ray. Sorry, was that you, Ray?
Oh, sorry,
I couldn't see you there.
Yeah, my Wi-Fi isn't great, so I turned off the video. Okay. Apologies. Yeah, no, in terms of that, bringing goods from outside the EU, so let's say the US in that example would be, again, if you're importing it into Ireland, you're going to pay customs duty and VAT on that import. But if it's going to be exported again, there potentially will be duties applying in the UK again. So there'll be a double duty effect there if that's the way goods are moving. So one way to avoid that, if it's a business model, would be to again, use customs warehousing and maybe import the goods into a warehousing procedure that suspends any payment of duties in Ireland, and then the goods can move to the UK where the duty would apply. So again, it's the business models, what way they're supplying it, and it's important to remember, if you are that kind of distribution centre in Ireland, maybe look at the customs warehousing procedure.
Excellent, thank you, Ray. Sorry, I was on mute there. Sorry, just jumping apps here. Okay, on buying hardware from companies in Great Britain, we are paying the VAT to the carrier before they are cleared at customs by customs clearance. As the VAT is not on the supplier's invoice and we do not receive an invoice from the courier, what is the correct accounting procedure to post on Sage? They obviously use Sage accounting.
Yeah, it's I suppose the response would be the VAT is self-accounted for based on the shipment and associated shipping, but this appears to be the VAT on the actual customs declaration. So you need the reference to the customs declarations from the courier themselves to be able to claim that back. You need the proofs, and again, it may be tied back to who is acting or who's been declared as the importer on those customs declarations. So all goods require a customs declaration. The couriers will be completing customs declarations maybe on your behalf, but again, it's linked back to who they're actually entering on the import declaration. But they should be able to provide you that information if they're charging you VAT at import based on that. And again, another useful thing will be maybe to provide your URI number to the supplier, because more than likely the supplier is providing some of the information to complete the import declaration. So if they had your URI number, that would reference it, and you'd have a link then through Ross in relation to your URI number being used. So if there's more questions on that, again, you can send it into Brexit queries. If there's a particular example of that, we might just follow up on it.
Okay, super, thank you, Ray. I'm not sure about this one, but how is the VAT charged on purchases entered on VAT 3s?
There is revenue guidance on that. I understand as long as you pay the import VAT, but I mean, as Ray mentioned, you have to see exactly what way it's happened in principle. If you're a business, you should be able to do postponed accounting, but you need to make sure at the level of who's doing the import declaration that you're getting mentioned. But as I understand with the VAT returns, you can place the import VAT down as a credit, as a purchase, but you need to check you have the correct paperwork. Ideally, you should have a copy of the single administrative document showing you as the importer. And then I think there's a new form, PA1, that shows whatever goods you're putting to postponed accounting. And that there is a publication on the revenue website showing how this operates and how exactly you should do it. But as just going back to it, as Ray mentioned last, there is a kind of an anomaly at the moment. The couriers are bringing them in, and obviously if they were to do it and get every name of every consignee, it would be probably more difficult for them to do it. So you need to check exactly what has happened deep down in the process to see that you're correctly reclaiming your VAT, and maybe to talk to revenue, because ideally you want to be named as importer before you can reclaim that import VAT. But in principle, you would think revenue should allow it, but I can't speak. Ray may be in a much better position to talk about that.
Yeah, it's as you say, Paul, it really is important to know who's listed as the importer on those declarations. And again, if it's a courier and it's a regular basis, a regular movement, they really should have your details and be inputting and even making that claim on your behalf for the postponed accounting, so it doesn't apply on the arrival of the goods. But again, it depends on the courier systems and what they're actually implementing in their own internal customs declaration systems. But again, if they are referencing that VAT at import, and charging it to you, they should have a declaration linked to that you would need access to.
I think if you're buying from suppliers in Great Britain, you need to tell them all this and tell them to tell their couriers to put you down as the importer and give your details. And that's the important thing. If you just make an order and you don't communicate your own tax details and the ORI number, then you can't expect it to be done with you as importer. So I think you've got to have the conversation with your supplier and their whoever they're using, whether it's fast parcels or freight forward or whoever, to make sure that you're named as the importer of record and you get this SAD, because that's the best proof of that. And that is, it's clear. It's a little bit, I expect at the moment, just by way of, expedience, that maybe the costs and the volumes and just the newness of everything, maybe things are being done a little bit less than ideal, but it's very, very challenging. So maybe this is the best that can be done.
Excellent, thank you, Paul. I think this one sort of plays into what you were just saying there, but large multinationals are insisting we place orders on their UK sales company, whilst goods shipped from the EU directly to Ireland. The UK invoice will show an Irish VAT number. Is this legal, as we prefer to deal directly with the German producer?
That's similar to one earlier on. It's that triangulation issue, and as Ray mentioned too, that's alarm bells. You have to look at whether that's the proper procedure now, because the UK is now out of the EU, this intra-community, the procedure by which the seller in the European Union is allowed to effectively zero rate it and use self-account has very precise conditions. And I'd go to the revenues page and look at what they are. And I think that may not be complied with here. So you need to look extremely carefully. Everything coming directly from the UK is an import, and import VAT's payable, and you might be able to do postponed accounting, but you need to look very, very carefully at the VAT position there. I suspect that may be wrong, but I don't have the full details, and I don't know what.
Our tax side, I sent that to our own tax team. I'm not the VAT expert, so I sent to them just for clarification around it. They said that it is possible if the Irish VAT number is legitimate. Obviously, you can check that on the Europa websites in terms of checking VAT numbers. But then it's down to the individual companies to determine who they deal with. So again, I know there is some contracting terms around that the distributors are contracted for UK and Ireland rather than an EU distributor can't actually sell. So it depends again on the business models, the type of product they're bringing in. But that process can work. Again, just validating that it is a valid VAT number. And again, if you have an exact example you want clarification on, you can send it in to us.
I should have just said, if the goods ship directly to Ireland, it shouldn't be a UK import. Sorry,
no,
I didn't see that part of the question.
Excellent, thank you both. Last one on VAT here. So we often send goods to the UK on a temporary export for repair or recalibration. Previous advice we had received was to add the original value of the goods to the commercial shipping invoice. The UK recipient is now advising that we amend this to the current value, i.e. apply the depreciated value of goods. Due to UK tax laws, Unless they own the equipment, they cannot claim the import VAT back. So the value for customs is very important. What should we do?
That's probably down to the customs procedure they're using. If it's under repair, you can use an outward procedure, an outward processing procedure in Ireland to export the goods on an export declaration. And then on the inbound, it should be covered under an inward processing. But if they don't have that inward processing set up, they could be just completing a full declaration. So I'll come back to the valuation in a second. So it's obviously, it's depending on the procedure they're actually using on the customs import declarations in the UK. So that's the key to it. Because obviously when those goods come back into Ireland, you don't want to import them on a full import declaration. You want to bring them back in under return goods relief. So there is a process around that, and there's an outward, in terms of the Irish company, you can look up the outward processing details on the revenue website. There's a link there to outward processing, and it gives you, there's actually a manual that gives you the re-importing procedure. But then in terms of your customer or the person doing the repairs in the UK, they should really look at the type of procedure they're bringing the goods in under. And then going back to the valuation, there is strict criteria around the valuation of goods. I think there's 7 different steps. And again, there is a manual in relation to valuation. I won't go into the details there, but the actual current value will be the one that we use. But again, there's strict requirements around the valuation you need to put on it.
Excellent, thank you, Ray. Now we're moving on to the next section here, which is import-export customs. And here's a situational question here. For exporting individual small orders, B2B, of let's say less than €200 and 1 tariff code, our understanding at present is that the new import-export clearance charges could add 30 to 40 euros export clearance plus 30 to 40 euros import clearance charged to a typical order of this nature. Is there any talk of small orders being excluded from this type of clearance procedures? Our current understanding of the impact could place a significant portion on our business under price pressure and push us out of the market. The end cost to the customer could raise as much as 60% on a £150 sterling order placed with us.
Yeah, unfortunately, that as the UK have now left the EU, customs formalities do apply, so both at export and import. There's no way around this. This goes from, if you're bringing tools over to complete a servicing job, an export declaration is required, to obviously goods of high value. So there is no, unfortunately, the declarations are required. So I don't know if I can add anything more to that.
If not, we'll move on. But yes, thank you for answering that one, Ray. Another situational question. Company ABC Limited is Irish-based and have been selling B2C into Ireland, UK and worldwide from warehouse in Ireland prior to Brexit. ABC Limited is VAT registered in Ireland and in the UK. They have an EORI number issued from Ireland predating Brexit. As they are VAT registered in the UK, they can get a UK EORI number. As there is now no duty and only VAT chargeable as a result of the trade dealer, they wish to sell into the UK from Ireland on DDP terms. They would declare the VAT on their UK VAT return, so nothing has to be paid at point of entry. My question is, what EORI number must be listed on the customs documentation to avail of declaring VAT on their VAT return and avoiding payment at the point of entry?
I think that's
that would be the UK side. Oh, sorry. The declaration itself in the UK would have to have the GB EORI number. There'd be no other EORI that would be valid on it. And then you just need to make sure that GB EORI number is linked to your GB VAT number. So that's one part of it. Obviously, your IE EORI number will be used on the export declaration from Ireland, and the GB EORI number will be used in the UK. But again, bear in mind that duty preference only applies to goods of EU origin. So if you're importing goods, even though it's coming from Ireland, it would have EU origin, just to be aware of that. So duties may apply at the point of importation.
Okay, thank you, Ray. Paul, can you add to that, or shall I move to the next? Yeah,
I'm not sure the exact situation here, whether it's an Irish registered company or a UK registered company. And I think that, I think Ray effectively made the same point. I mean, generally to import into the UK or import into Ireland, you need a company or a person established there. So unless there's 2 companies, you can have EORI numbers in the past, but they mightn't work now because there mightn't be a GB EORI number. You can have had UK EORI numbers, but they mightn't work now. But I think really what it comes down to is normally to export and import, you need somebody established on both sides to do to deliver actually DDP in that country. So there's a lot more. There's a lot more detail in that question that would need to be explored, and it should be looked at.
Okay, thank you, Paul. And Ray on that one. So again, a similar question, but with a slight sort of variance. But this company has an EORI number and have been importing goods from outside of Europe for some time. We use a clearing agent for this and pay VAT and duty up front. We take smaller backup goods from the UK. We are now being asked by the UK company. We purchase X works from them. Could you please let me know? I think this is, it's badly worded, but it said, could you let me know deferment account number as well? Can you please explain the process of setting this up? Does that make sense? Sorry, it's not very well written.
Yeah, no, it does actually.
Good. Okay, it makes sense to me.
If you have a EORI number, you're obviously they're importing already from outside the EU, so they're used to their procedures. But they actually have a TAN number, which is a trader account number linked to that EORI. It's really your customs and excise number, and depending, it doesn't say in the question now, but depending on the agent may be using their TAN, or the agent may be paying on their behalf and charging them an invoice later. But if you have your TAN, you can actually top up it by credit card, debit card, or single debit instruction to make payments to it, and you can give an authorization to your customs agent to use that. If obviously depending on cash flow considerations and that type of thing coming in, depending on the duties you're going to be paying, you can set up a deferred account. It's a deferred payment. So again, it's just to distinguish, I suppose, between the postponed accounting, which we've mentioned already, which is for VAT. If you have an Irish VAT number, your agent should be putting that details on it to postpone the VAT at the point of importation. So then you can account for that in your normal returns. But if there's duty still applies, you can actually defer that. So there's a deferred payment authorization, and you don't need to make payments on that until the 15th of the following month. So there's an application procedure around that, and either a financial guarantee or a cash guarantee linked to it. So again, it's really a business decision. Do they want to maintain maybe the top-up procedure, or do they want to move into using that customs deferred authorization? And there's useful information on the revenue website in relation to the customs deferred authorization and the application process.
Excellent, thank you, Ray. Again, similarity here, but are goods with an EU country of origin purchased by a GB company and then distributed from their distribution centre into Dublin subject to tariffs?
We've touched on this before, it's the Percy pigs, and this is a huge issue because for goods to get zero rated under the agreement, they have to be of Great Britain origin. And that requires that they're either manufactured there or they're subject to a certain amount of processing. And there's all these detailed product rules as to how much non-EU or UK content you can have. So this hits potentially goods being distributed for the islands of Great Britain and Ireland from the United Kingdom. So as Ray mentioned earlier on, the only way around, so it might be that goods that are actually made in the EU, because they're then being, if they're brought into the United Kingdom and then sold from there directly, they might qualify under the agreement. Whereas in reverse, as we mentioned earlier on, because EU goods, Ireland would include EU and continental Europe, and Ireland, good content would all be one. So prospectively, there could be duties. So people have been talking about the possibilities of using certain transit type movement to the UK or exportation relief. They're quite awkward. And the people, you'd have to set them up in a particular way so this duty doesn't apply. So this is it's the Percy pig problem. The fact that goods, when they've gone into free circulation, they're actually there in the United Kingdom and they're not being earmarked and under some kind of tight customs control. When they're then exported to Ireland, may not qualify for zero duties under the agreement, which could be very profound in certain circumstances. And it's been quite a bit in the news about this issue.
Adam, could I hop in there on this one?
Yeah, please do, Neil.
And I'm not sure if any of our participants this morning are in the bread business, but I've been dealing with a couple of these queries already, and you may or may not know that Ireland imports the majority of its flour, and it imports the majority of that from the UK for bread making and so on. But the UK, as Paul has just said, obviously most of that flour is grown from UK grain. However, when it is turned into flour, it is very frequently mixed with Canadian and US flour. And if the percentage of that exceeds 15%, then the same rule that Paul has just has mentioned results in charges there. So I will make the kind of general comment that when you're asking these kinds of questions of Paul and Ray and Derek Dunne, we can't reinvent history, unfortunately, with a lot of this stuff. The UK has left, and there are going to be cost consequences to a lot of these. So what I'd be saying to you as business people a lot of the time is, if you're buying this stuff from the UK, this is the stuff you need to be telling them. If in the case of flour, if you have more than 15% non-UK flour in it, you need to change that, or else I'm not paying you. A lot of these are going to become commercial discussions in the near future, and there's only so much we can do about them, simply but because of the fact that the UK has left, and that has consequences under trade rules that, with the best will in the world from Ray Ryan, there's nothing that the Irish Revenue can do about it.
Neil, sorry, if I can just add a little bit to that as well. From a practical experience point of view, the amount of goods that are coming into Ireland at the moment that are not of UK origin and are attracting duty is quite amazing. A lot of businesses, and I think it was the nature of the way the deal was done and finalised, a lot of businesses weren't aware of that. And I think one of the big take-homes from today's would be to look at the origin of your goods and to see what the VAT or duty liabilities might be. And as you rightly say, we can't rewrite history. The facts are, if they're not of UK origin, i.e. manufactured in the UK or grown in the UK, duties will apply.
Very good. Thank you, Derek. Thank you, Neil. That might answer the one about ponies and horses, which is coming up now. We export ponies and horses to England and Europe. What are the exact requirements for UK and animals passing through UK to Europe? Does anyone have any specific sort of industry knowledge on that one?
I don't, but I looked it up because I saw it there in the questions. I mean, if you go to the UK guidance on their transition website, or they call it something different now, it's uk.gov. If you put in transition, you'll still get it. They do have a note on exporting ponies every direction: Northern Ireland, east, west, north, south, and they do have one on ponies. And they make the point, but there's a proviso at the end. They make the point that importing ponies into the UK would require health certificates and registrations and prospective checks at the border. So you can see that there, but generally the UK is postponing bringing in its full customs controls, as I understand it, and that from the 1st of January they're only applying customs controls to control goods like medicines and guns and things like that. From the 1st of April they're applying this SPS, which is the agricultural one that matters here, the sanitary and phytosanitary, and then from the 1st of July they're apparently applying full controls. So on the one hand they seem to have deferred imposition of controls, but if you look at the guidance on exporting horses and ponies, you'll see it's quite onerous. So I don't know exactly where it sits between the guidance they published around November, which the person can look at, and the fact that they're postponing the checks on sanitary and phytosanitary food and animals until April. I don't know if they're just waving everything through or whether it's just light touch, but beyond that, I don't know.
Yeah, I can come in on that too.
Thanks, Ray.
In relation to the transit in particular, I suppose the exporting, obviously you need to do an export declaration from Ireland. You may need to register with the Department of Agriculture because you're exporting goods. Obviously, if you're moving ponies and horses already, you may already be registered with them, but definitely check it out. They have a Brexit page on the Agriculture, on the Department website, and there's useful information there in relation to importing and exporting. Again, as Paul mentioned, the fact that there's almost a phased approach in the UK, so you may be moving something before April, and there may be different requirements after April again, and just an awareness around that. And the full import declarations are required from the 1st of July, I think. But just be aware again that the import formalities do need to be completed. Even if you did move stuff in the first 6 months, you still need to complete them, or someone needs to complete them in the UK. Then if you're actually moving goods from Ireland through the UK into Europe, you need to complete a transit declaration. So it's another customs declaration into a system. Key point on the transit declarations is you need to have a transit guarantee. to actually create these declarations. So again, you need access to a transit declaration and a transit guarantee to complete the declarations. You need to, obviously, commodity codes are linked back to it again. Commodity code for horses and ponies apply there. Another important thing to note is that when you're moving goods through the UK, there's requirements for moving goods through the UK. So in terms of their GVMR system, their Kent Access Pass, there's exit declarations required from the UK. There's re-entry summary declarations required into the EU, and then there's pre-boarding notifications required. So there's quite a number of different steps. It may not be you as the exporter that needs to do them, but again, have that discussion with your haulier logistics provider, or if you're moving them yourself, you need to know the exact requirements for the hauliers and the exact details. And then if you're moving the goods into France for the live animals, there's actually a requirement to have a registration done on the Traces system as well. There's a different process in place for the Netherlands and Belgium. So obviously, depending on the route you're traveling, there's different requirements. We do have information on the Revenue Brexit website page in relation to requirements for exporting, and it gives a breakdown of exporting to EU member states using transit, and there's useful information on that in relation to it. So it goes into a lot more detail, but there is a lot of steps in it if you're doing the transit, and it's an awareness around it, because obviously live animals, you don't want delays. Live animals held up in transportation boxes or anything like that. It's a particular concern, so definitely have everything lined up and ready before you move the goods. The animals even, sorry. Yeah,
excellent. Thank you, Ray. And in fact, someone's just popped something in the chat there that's relevant to this, and as it's quite specific, I'll read it out now. So the person here completely agrees with what's just been said. That's good news. The origin of goods from the UK has and is causing an issue. Can you please advise when you can research the tariff code on goods and insert country of origin and find out what duty is applicable on your goods?
Yeah, if you're importing goods into Ireland from the UK, you can put in the commodity code and the country of origin into TARIC, and it will bring it up. So it will show you. So if it's EU goods, you can actually enter European Union as country of origin, and it will show you a duty rate that may apply. And then obviously, if it's importing from Ireland into the UK, or sorry, for exporting from Ireland into the UK, they have their own tariff system, so you'd have to check it on that.
Thanks, Ray. And actually, just back to my list of questions here, the next question actually just happens to be on the country of origin. So it's, you know, when imports arrive, will duty be applied based on commodity codes only and the country of origin ignored, or will all goods with UK origin be charged duty-free?
It's that, going back to that claiming the preference, you actually have to claim it. So the commodity, or sorry, the duty is based on the commodity code plus the country of origin. So it's going using that information from the TARIC website. If you don't put in the preferential claim for UK origin goods, it will charge you the third country duty rate. So that's what did happen in the first few weeks. We've had issues where businesses weren't expecting to be charged, and it was down to the fact that the declaration itself hadn't the preferential duty rate included. So again, it's an awareness around that. You can correct it afterwards, but if goods are sitting in the port, there's truck drivers waiting there for accounts to be topped up. So again, an awareness around that if you are moving goods, to ensure that the agent or whoever's completing the declarations puts in the correct preferences. There's actually useful information. If you go on to revenue.ie/Brexit, under our latest news, we have a list of the common errors that were encountered in the first few weeks, and some links into that, and how to claim the preferential duty, how to claim postponed accounting. So maybe as a business, you can share it with your agents again. Most of them are aware of it now, but again, just don't assume anything. Share the information.
Perfect.
I think that's almost one of the most important things we're talking about. So I think that's really, really important. I absolutely second that. And you have to claim preferential origin, or otherwise the third country rate does apply. So that may be what's happening when people aren't telling their suppliers, what the particular position is. Maybe it's just coming in through the couriers or whoever, and they're not getting the information to claim preference. It has to be claimed. The agreement has procedures by which the seller is supposed to give a statement of origin, and then that's supposed to be, the buyer is supposed to get that and keep it, and it can be subject to audit. But the point is, you have to, if you want zero duties under the agreement, you have to follow certain procedures, and you have to get right down and understand who's doing the import declaration and how that preference is being claimed in it. And you have to get material from your supplier certifying the origin, and they're supposed to get other information. Now, it's quite onerous on the supplier side, not taking the risk on this, and because the rules can be quite complicated. They're per product, product type. Sometimes a certain percentage of, you could, in some cases, most cases it'll be clear, the manufacturer would normally know, but there are some complicated cases where origin is going to be very, very difficult to work out. There's tens and dozens of pages on the criteria for origin in this that are specific to particular products, and there's a maximum tolerance of non-EU or UK material you can have, and there's all kinds of twists and turns. So if you're going to claim preference, you have to get down and figure all that out, and some duties are small-ish, but some are up near 10%, special food type ones, cars are 10%. You're going to have to engage with that information and make sure it's claimed.
Excellent. Thank you, Paul. In fact, you just answered the sort of next question. I'm actually going to we're going to move on to general questions that we received during the week, guys. So the first one is just in terms of exporting to the UK market for OTC products and medical devices, Class 1. Can you please outline some of the key concerns and dates I need to consider?
There's the UK. This is a common enough theme that applies to a lot of regulated products. The regulation, when goods are coming from United Kingdom or Great Britain into Ireland and the EU, the new rules apply pretty much on day one. But because UK has left the EU, it's bringing in certain rules over time. So on medical devices and medicines, the best thing is to go to their guidance, UK transition website, guidance, and if you search guidance and regulation, you'll see, for example, I just have it open here and on screen, they've published on medical devices, and I can just looking to it quickly. There will accept CE marking. This is very particularly, this is so important, and obviously that business you need to look at the detail. But for example, on the page I'm looking at, they're saying they'll accept CE marking to 30th June 2023 and so on. So they're gradually leading things in. So if you're in that sector and importing into Great Britain, they're giving an easier ride to Irish and EU goods than we're giving to their goods. But there are lead-in times, and they're different for medicines and type of medicines, and there's a lot of twists and turns. But there are lead-in times, and I strongly advise to go to the EU, the UK, or the EU readiness site is quite good, but the UK's transition guidance site has loads of notices on medicines, medical devices. It's got about 100. So it's complicated, but the UK is giving some lead-in times, or really GB, because it doesn't apply to North-South trade.
That's actually very good advice there for the next question, actually, Paul, because it was on the importation of, an update on the importation of biological controls, which is they're used for agriculture and horticulture. So I assume they'd get the same information on that website you mentioned there.
It was probably the part for import, yes, and also in Ireland, look at the Department of Agriculture and Food and the Marine, and they would have information on importing agricultural and horticultural material, and you might have to register, as Ray said. There's a lot more controls once you're into agriculture and certain foods. There's another layer of registration.
Yeah, and just on that as well.
Sorry, biological controls wouldn't be agricultural. Sorry, they'd be more hazardous. Yeah, there's maybe NSAI. The Health and Safety Authority in Ireland would be better there. Sorry, if I saw biological and I assumed it was agricultural.
Just for some of those products, they may be, again, using tariff and commodity codes and the country of destination in this case when you're exporting. Sometimes there's export controls and requirements around that. So you may need licenses, particularly around chemicals, that's it, around the biological. There might some chemicals that require an export license as well. So just an awareness around that. And obviously the medical devices and that type of thing. You can check the commodity codes on the UK tariff site as well and see what controls may apply. But definitely use the sites that Paul referenced. There's actually a lot of information up on the Hmrc websites. So again, be aware of what's required. Be aware of what's required now. Be aware of what's required from April, and be aware of what's required when full import controls are implemented.
Excellent. Thank you, everyone there. This next question is more looking for an example of a product made in Ireland for export to Britain that is experiencing recurring delays in transit. The key reason why, and estimated early losses, both in terms of market value and if a perishable product, losses in wastage, disposal, or ruined produce. So this person's seeking to illustrate an illustration of problems with concrete examples, including the key issue causing the most delays for that product and the costs and losses being experienced.
I can cover some of that, I suppose, in terms of what we had experienced in the last month, mainly for inbound into Ireland. So I think the key here is the fact that the UK haven't fully implemented their import controls or import declarations. There's less issues being coming up on the UK side just yet. So the export declarations seem to be flowing smoothly from an Irish point of view, but there is a delay on the import side, or sorry, there is some common issues on the inbound I referenced already. Some of the common issues were around the fact that you're not claiming the preferences. So you're being charged duties, not putting in the correct details in relation to postponed accounting. These are leading to delays. It may seem like a small issue on a declaration, but if there's no money in the accounts to clear the goods from the point of importation, the goods won't move. So again, it's awareness around that. Customs is 24/7. They're open 24/7. Goods are moving 24/7, in particular at the Ro-Ro. So again, if you don't have the relevant information with your declarant or with your agent, they can't share the information with the relevant authorities. Another key point, especially in terms of the last few products we were talking about, is that documentation often needs to be sent in advance to the relevant agencies. So an awareness around that, if the documentation linked to the customs declaration isn't sent to the likes of Department of Agriculture or HSE, or obviously their equivalents in the UK side when that does apply, there will be delays. Could be a documentary check, but if the documents aren't there, there will be delays again. So it's an awareness around that. And then the impact of actually the data you need to share throughout the supply chain. Now, we reference it in a few different cases. There's import declarations, there's pre-boarding notifications, there's entry summary declarations, safety and security, but there's actually different parties maybe submitting those declarations for the one movement. So it's an awareness around that. And if you have an import declaration created, you may actually need to share that with your haulier or your logistics company, because they can't do their step unless you share it. So again, an awareness around that. So that's some of the examples we've encountered recently, and we will be adding to the website as more come up. Hopefully there won't be more, but we envisage that there will be different products and different issues. But I think especially if you're exporting now into the UK, anticipate some of those common errors that have been experienced on the inbound into Ireland, that they may apply when there's full import controls and checks done in the UK.
Thank you, Ray.
If I could just add to that, Adam, again, some of the biggest challenges we have is that businesses now need to engage in the customs process. It's not just sufficient to say we have a broker and they're going to look after everything, or we have a logistics provider who look after everything. They need the information. So the key document is the commercial invoice. And I know historically a lot of businesses possibly didn't invoice to their clients till the end of the month or whatever, but a commercial invoice is a requirement to create a customs declaration. And on that commercial invoice, you need to have vital information such as values, weights, commodity codes, Incoterms, how you're selling it. So I suppose, again, businesses need to engage in the customs process. Don't assume that your logistics provider or that your carriers are going to be able to complete all of this, because without that critical information, they can't do anything on your behalf.
Excellent. Thank you, Derek.
Yeah, actually, just to add to that, Adam, sorry. That was an excellent point that I should have actually covered. That it's what we've encountered is some businesses have thought they were prepared by having an agent in place, and they left it to them, but they're not aware of what's been submitted, so they don't know the duties, the VAT, the correct details, what's been charged on it. But again, it's making use of the supports that are available. So maybe even if you do have an agent, you might need someone part-time within your business that's actually taking ownership of this, so they can deal with any issues that come up. They can do the documentary, they can share that information. So again, using in particular that Enterprise Ireland support in terms of that €9,000 grant for full-time, or I think it's 4,500 for part-time. Again, look at that. It may be a consideration for businesses that are regularly importing or exporting. They may have an agent, but you still may need someone at least part-time, maybe kind of taking ownership of that customs requirements, even checking the stuff that goes through the account, who's using your IORI, following up, ensuring everything's correct. There's a lot of information that Paul and Derek covered there that needs to be kind of monitored by businesses now.
Very good. Thanks, Ray. That concludes the list of questions that were sent to us prior. Now, there are an awful lot of questions have come into the chat, but I've been looking through them whilst you guys have been talking. Many of the questions have actually been answered during the course of this session. But there are a few of similarities, which is around sort of using Northern Ireland as a channel into ROI. So I'll give this example because it's quite specific. If we buy from Bulgaria through a UK company, we are liable for duty at point of entry. However, we have a company registered in Northern Ireland. Can we buy through our Northern Ireland company and ship to the Republic without incurring duty?
The Northern Irish company would have to complete an import declaration on Hmrc systems, and customs duty and VAT would apply and be paid to Hmrc. And then once it's cleared, you can move the goods without any customs formalities between Northern Ireland and Ireland. So it's treated almost like another member state in terms of the movement of goods. So they would require customs declarations on imported goods. So as such, bringing goods in through Northern Ireland still requires customs declarations. Even if it's GB goods, there's customs declarations. Now there is requirements, obviously, in terms of the joint committee decisions, goods at risk, and that clarification. And there's particular registrations required for Northern Irish companies. So again, it's an awareness around that. And if you have a Northern Irish branch, how are they bringing in the goods and ensuring that it's correctly imported?
Excellent, thank you, Ray. Actually, this question, actually, I'm quite interested in the answer to this one, because there's always a question about VAT being charged to training services. A lot of training in Ireland is actually VAT exempt, but there are a few trainers that still insist on charging us VAT. But, and I've had this problem myself, but if you participate in training services in the UK in the past, we could reclaim the VAT on that service through Hmrc. Does that remain the same, or is there a charge to this?
The system for reclaiming VAT, there used to be an EU-wide system that was quite easy, but I think it's still possible. It's just more awkward. And you need to look at whether you're entitled to claim. There are circumstances where you incur VAT abroad that you can claim, but the big change by Brexit is that the EU-wide system, which is much more expedited, and I think you can possibly even channel it through your home revenue, isn't available, and you have to make a more awkward type of claim for reclaim, but you need to understand whether you're entitled to reclaim or not.
Okay, very good. Thanks, Paul. This one's around courier companies. Is there any regulation around courier companies having to comply to deferred revenue rules? Some are charging per shipment rather than following the process with revenue in Ireland.
And that's the question that's the one we've mentioned several times. Like if you want postponed VAT accounting and you want to claim zero duty, you have to make sure that the import declaration is done properly. And if you're not engaging in understanding exactly what's happening on your import declaration, that might not be possible. You might be able to reclaim it afterwards. And to be fair to courier companies, they're moving enormous volumes. It would be, and they're doing it at quite an economic rate in terms of the cost they're charging. To ask them to do those declarations, I'm sure, might be very difficult for them to take on.
Yeah, another key thing on it is the actual conditions of sale. It's very important now that is it delivered duty paid. So again, you may not even have it in your contracts currently, but you will need to have it in now to be clear who is responsible for each part of the process, who's taking the responsibility for the payment of duties and VAT in Ireland, that type of thing. If it's not in your contracts, I would start looking at the contracts themselves. What is the sales conditions? Ensure the terms and conditions are correct. In terms of the agents and the declarants, there is requirements to have representation forms completed if they're completing declarations on your behalf and that type of thing. So there is requirements around that. They can be direct or indirect, and responsibilities then can fall to the declarant in certain cases.
And just in continuation of that, Ray, thank you for that, by the way. If the couriers are postponing VAT using the company's VAT number on shipments organised by the supplier, how can that company see where their VAT number is being used? Is that possible?
Yeah, it is. If your URI number is used on any declaration, the ROS system itself, your inbox will have it under the C&E, Customs and Excise heading. Your ROS inbox will have it in there. What it does is it gives you a weekly statement of any transactions that are used using your URI number. If you actually are listed as a payer on any declarations, there's a monthly statement that issues. So again, it's an awareness around that, that to access those and ensure that, again, that monitoring piece around that. Input errors can happen if it's agents, and they may input their incorrect URI number. So again, just to validate those maybe on a weekly or a monthly basis, and tracking that. So it is an important transaction, those customs transactions. It's difficult for small and medium enterprises, I think, that taking on this in terms of the formalities that are required around it. And obviously it's linked back to customs duty and VAT now as well. So there's a key aspect in relation to moving goods from the UK, and that kind of declarations and the requirements that follow from them.
Okay, excellent. Thanks, Ray. I'm just looking through the questions. They're all very similar to ones that we have answered already. So there's just, it's a lot about duties, liability, and what have you. There's one specific one here for you, Ray. It's one regarding WPM, wood packing materials, and if the UK are insisting on heat-treated timber as per ISPM 15 from the January the 1st, or is this deferred to April the 1st?
I think it was deferred, but I don't have the date. I don't think it was April either. I think it might have been February. But if you contact the Department of Agriculture, or it probably is on the Hmrc website, I just don't have the date. I think they did defer it. It was due to come in the 1st. But all inbound wood packaging material does need to be ISPM 15 stamped as such, heat treated. So it's an awareness around that. Again, obviously, it's a key part of goods moving, the packaging and material around them. But definitely, it should be on the Hmrc website. If not, you can contact the Department of Agriculture and they'll have the date for you.
Excellent, thanks, Ray. And listen, I think that concludes the session today. We will continue the Q&A sessions. They will be on different topics, but Brexit, if there's still a demand for this type of event, we will provide more insight from a panel of experts. When we send out the recording of this session today, we will include as many as we can, hopefully all of the websites, the support websites that were mentioned today. I know Maeve has been putting them into chat and what have you, but when we email you all, we'll put links to those websites in there. So hopefully that will facilitate your navigating around the information that you require. I'd like to thank the panelists today. Thank you so much for your time. As always, Derek and Paul have been on our panels for the last number of years. Ray, thank you for joining us. I know it was short notice, but it's been really, truly excellent to have someone from Revenue with your knowledge to be able to provide insight to our members and everyone on the session today. So thank you, everybody. I hope you got what you needed from this. And as mentioned, we will be sending the recording out to you later on this afternoon. So thank you all, and do stay in touch if you have any issues. We'd be happy to try and help you out. Thank you.
Thank
Cheerio
you.
now.